Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 7th of March 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. A relatively quiet session on the world's foreign exchanges, it must be said, yesterday as we count down to the non-farm payrolls releases tomorrow. Features that we did see, however, a pushback from the Australian and New Zealand dollars against their US counterparts, bouncing slightly, perhaps on some better Australian data that we'll take a look at momentarily. The Indian rupee also gaining against the US dollar, taking 0.13% off of the US currency, bringing its weekly gains to 1.2%. Dollar index for its part unchanged on the session, still up on the week, but really marking time ahead of key economic data ahead. Okay then, what's on the calendar? Events that may move the markets today. We've already had some data out of Australia. We had retail sales and balance of trade data for January. Retail sales somewhat disappointing. Trade balance data, as we'll see momentarily, a bit more positive for the Australian economy. Elsewhere, we had leading economic index data out of Japan for the month of February. Again, that was on the disappointing side, particularly when one compared it to the prior read for the month of January. To come this morning at 06:45, we'll have unemployment data from Switzerland for the month of February. And then at 9:30 GMT, we're back in London for a speech by central banker Tenreo, Bank of England member there. And then at 10 AM, the first of two key data points, or macro data points, out of the Eurozone. First is gross domestic product to final read for Q4. And then at 12:45 GMT, it's the ECB meeting, interest rate decision and press conference to follow. At 13:30, we shall have continuing and initial jobless claims data out of the US, the last print on unemployment ahead of tomorrow's key non-farm payrolls data. And at 13:30 also, Mario Draghi's press conference will kick off, a monetary policy statement and a chance for Mr. Draghi to answer questions from a gathering of journalists and analysts. At 17:15, we're back in the US for a speech by the Federal Reserve's Lael Brainard. And then at 23:30, if you're still in the market, you can catch overall household spending data from Japan for the month of January. Okay then, breaking news and comment that's caught my eye overnight. And first of all, Australia's trade surplus leaps to a record of 4.55 billion Australian dollars in January, as exports from the country grew by 5% month on month to tally to 39.94 billion. So the export-led Australian economy is going very well, but the focus for the RBA probably remains on the internally domestic economy, and the construction PMI data shows just what they're focusing on. Australian construction PMI remained in contraction at 43.8 during February, and well below the 15-year average of 46.41. So exports booming, but domestic construction not doing very well at all is the picture in the Australian economy at the moment. Meanwhile, Microsoft has identified Iranian hackers as the source of a sustained cyber attack on more than 200 companies and governments around the globe. Microsoft estimates the losses that the hackers have racked up or spirited away so far to be more than $200 million US. We haven't spoken about emerging markets particularly recently, but there was a sharp reminder that they are still a potential issue. Argentina's industrial production fell by 10.8% year on year during the month of January. This was the 8th straight month of contraction in the data, though the figure of minus 10.8% was better than the prior two readings. So there are still massive problems in some of the emerging markets, and Argentina is probably the flag waver for these. We may not have talked about them recently, but we mustn't forget they're simmering in the background. Okay then, food for thought, something to take away with you into the trading day and beyond. Well, why not think about this? As we've just seen, we have Q4 GDP growth data out of the Eurozone later, and then the ECB meeting on interest rates. So the question I want to pose here is, has Eurozone growth bottomed out? From my point of view, I think it's unlikely that it has, but we'll just look at the charts to see what they can tell us. So in our first chart, we have composite PMI in the Eurozone against GDP growth rate, obviously a leading and lagging indicator being compared here. We see the composite PMI picking up, and we have a hint here of GDP growth picking up in the Eurozone too. And then we look at our second chart, which plots the growth rate for the Eurozone against German manufacturing PMI. And of course, Germany has been the powerhouse of European Union and Eurozone economic growth of late. Here we see that gentle pickup in GDP growth, but look where the German PMIs are heading, the industrial PMIs, further into contraction territory if that trend continues. And so what's the marginal effect of that? I suspect it means that we haven't seen the bottom yet as far as Eurozone growth and a slowdown is concerned. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leverage trading for you, then please do contact your Pepperstone account representatives and do take the time, please, to read this risk warning thoroughly.